Nolan, good to see you. We start with a really important question. Are you taking on too much risk? 4 signs that you might be. Risk isn't just about numbers, it's about how you feel when market conditions change. So let's talk through 4 signs that you may be taking on more risk than you should. Number one, you check your accounts constantly, but how often is too often?
Thanks, Erin. Risk is an incredibly important thing to talk about, and this is a very good first stopping point. How often is too often to look at your funds? For everybody, this answer is a little bit different, but if
Right.
you checking your money means that you feel the urge to change something, you probably shouldn't check too often.
Mhm.
Most investors, once you stick with an investment strategy or have an investment plan in place, weathering some of these risky storms is pretty important. So if you're checking constantly and maneuvering your money constantly, you may be cutting yourself off at the knees a little bit.
Yeah. And these are all interrelated. And that brings us to the next. Do you lose sleep when the market drops? Though that being said, sometimes, Nolan, it's really hard to tune out the headlines.
Yeah, and they're everywhere. I mean, Fox and NBC and MSNBC and all these different news broadcasting stations will have ticker symbols across the bottom showing you how good the market's doing all the time. So if you're constantly watching news or studying finance or looking at individual stocks, and you're stressing about it or losing sleep over it, or you're, again, maneuvering your money a little bit too often, sometimes you might be in too risky of a pot of investments if they're moving that often.
hmm All right. And the third sign that you may be taking on too much risk, you've made panic driven decisions before. This is known as emotional investing. The best way to explain how this works is through George Costanza. What are we looking at, Nolan?
George has the perfect quote for this. If every instinct you have is wrong, then the opposite would have to be right.
Yep.
George is basically saying with emotional investing, you reach these points of either euphoria, capitulation, these real highs and lows of emotional investing. And if you are prone to emotional investing, you might make the wrong decision at the wrong points in time. If you're
Right.
feeling extremely euphoric about the market or you're very optimistic about the market, you may want to buy into it, but it might be poised to go down from its highest point just from the nature of the beast. So it's important to understand what point of the investment cycle we're on, whether it's the best times of euphoria, worst times of despondency and skepticism, or anywhere in between, and then making appropriate decisions based on that.
hmm Sign number 4, you feel pressure to chase returns, AKA FOMO.
Yeah, and FOMO is something that I think we all have experienced, especially over this past year or two, with so
Yeah.
many different assets going up and reaching all-time highs. Chasing returns or going after investments that have been doing extremely well can work sometimes, but oftentimes, you're buying in once the gains have already been made. And then if there's any type of correction, you haven't held it the whole time. So you can't weather that storm as well as someone who's held the asset for a long time. So
hmm
chasing returns can introduce maybe some fundamentals that don't work quite well with stock selection or bond selection. And it's just important to use proper fundamentals when picking investments, not just look at the highest rate of return.
Right. And you've touched on this, but it bears repeating. How can working with a financial advisor help us stay in line with our risk tolerance?
Well, this one, we actually have a good systematic way of doing it. When we work with clients in the first place, we do what's called a risk profile questionnaire, which is, a lot of questions asking how comfortable you are with this or that type of investment. But we update that on a periodic basis and do little miniature versions of it at each of our reviews. So we're kind of constantly talking to clients about their risks, how much they're willing to lose to get a certain type of gain, and then what is the broad-based economy offering as far as investments go. So yeah, we do that pretty regularly, but with good fundamentals and a good systematic practice.
Yeah, that's a good reminder that this kind of is a moving target. Your risk tolerance will change over the course of your lifetime and, of course, over the course of your retirement as well. So, Nolan, if somebody would like to sit down, maybe some of these signs are resonating with them, maybe they're taking on too much risk, what's the best way to reach you?
Well, they can call us at 616-301-2581 or go to our website, which is cornerstone-rp.com, and ask us any questions that you might have about any of these things.
Great. Nolan, thank you.
Thanks, Erin.